Could you just tell us what does this deal do? What does this partnership aim to do?
So this is a partnership between a very large infra developer in India with a very large LNG and gas global major. So Total was always looking at to come into the Indian market to participate in an end-to-end manner, all the way to the retail. And we, at Adani, via Adani Gas, had the capability to now provide a distribution channel. And us being, so it was it's a marriage in that sense between a large global resources major with a large Indian infrastructure company. So it's a very good fit from a point of view of strategy for us to align ourselves with a global major, and for them to align themselves with a large infrastructure group in the country.
Okay. Robbie, hi, welcome to the show. Congratulations on the deal. If you could provide some clarity in terms of what the eventual shareholding pattern would look like, both from Total as well as from the promoter's perspective, and how would it work in order to get there?
You see, at completion, we expect the shareholding between Adani family and Total to be approximately 37.4% each. That will be at completion of the transaction. So as you've just heard in the announcement, Total will go through and make a public offer. That process will run through. And we expect that process to complete over 6 to 8 week period. Post that, there will be a secondary, and which will then, depending on what Total can acquire from the market, then from a secondary sale, they will acquire that from the family shares, and that would mean that they will end up at 37.4 and Adani family at 37.4, and 25% then remains in the market. 25.2% will remain in the market.
Okay, and is there any sort of conditionality going forward in terms of, say, upping their stake eventually, or you're reducing your stake?
No, the agreement is based on being what is publicly disclosed, that we both parties holding the same number of shares.
Is there a ROFR or something? Which is part of the agreement?
In agreements of this nature, yes, there is normal tag along and tag away rights,
right?
But which are customary to agreements of such nature. Yes.
Okay, fair enough. Let's just come to the deal itself. So this is gas distribution. But there is also in the press release mention of building 1,500 fuel retail outlets, right? That is interesting. Could you talk to us a little bit about that? What is the aim? Yes.
Part of the distribution license also be able to, we have the ability to develop CNG stations, and that allows us to then retail the fuel directly. Now, within the license framework, it allows Adani Gas to have those 1,500 odd stations that they will, but that will depend on each location as they go through. It's an important element of the overall strategy, because going forward, it addresses a very important point from a family perspective also, which is, it allows us participation in the future in EV. So it becomes a comprehensive point of connect with the final customer.
Is that the was that the clincher in a sense, access to, downstream marketing, downstream retail? And this is the second deal in that regard this year, right?
Correct.
Which has come through. So it's a lucrative market, and I think everybody recognizes that, and this is an affirmation of that?
Yes, I think it affirms two things. One, which is very important to convey, it affirms that a Indian homegrown corporate meets the governance guidelines, etc., of a global listed company. That's one part of it. The second part of it is that yes, being a large infra major, we can execute on the ground and go directly to the customer, which is Adani Gas. This becomes very important for somebody like Total, who have very strong upstream presence, and obviously in their home market, downstream presence as well. Now, this gives them a chance to have the same, with Adani, the same presence in the downstream market.
Okay. Robbie, if you could just outlay, give us a sense in terms of what the capital outlay would be for y'all in, say, the next 3 years, then how much would y'all be investing?
We expect on the current, what been disclosed and our current GAs that we have, a capital outlay in the order of about 7,000 crores.
Okay. And just a quick word in terms of the utilization of the funds as well. I mean, what does the balance sheet look like right now, pre and post the deal? How exactly would the funds be utilized?
This is for AGL or?
For Adani Gas.
Adani Gas. For AGL, because it's it will depend on how, because this is a secondary sale in total, so it doesn't impact the company level balance sheet.
Okay.
It is just a secondary change in the shareholding.
Okay.
So it doesn't have the impact on that. It just means that now two substantial shareholders are committed to growing the company, and the capex that is required to be funded are committed by both parties from that point of view.
So
but it doesn't change the, this transaction itself does not change the balance sheet, just changes the shareholding.
That 7,000 crore figure investment that you mentioned, that is across 10 years from Adani Gas and 7,000 crores from Total. I mean, is that?
No, it's a total investment by the company across its GAs, across the development plan that the company has against the current GAs.
Okay, because the press release says that you will make significant investments in the next 10 years, right? I mean, both partners across the businesses. So that 7,000 crores is to be made over the next 10 years, essentially. The total investment under the partnership.
For Adani Gas, we will make that investment. And obviously the partners are supportive of that investment.
Okay, fair enough. You know, so will this entity in a way be an integrated entity then, right? I mean, we've got various players. Petronet is the largest importer. GAIL is largely a marketing transmission player. IGL and City Gas players are different. So Adani Gas now is essentially going to be present in all these value chains?
Adani Gas itself will be in the distribution and retail. And with Total and Adani as a JV on the private side, we have also LNG terminal facilities.
Right.
So if you look at from a portfolio investment by Adani family and Total in India, as was part of Total's press release, it gives a full end-to-end from LNG to distribution. So from that point of view, if you look at from a portfolio perspective, from Adani family or from Total's point of view, yes, it becomes a fully one of its kind and unique entity within the country.
Any inorganic plans in the industry for Total as well as Adani?
No, not that I'm aware of or I can share at this stage or anything concrete.
Okay. All right. What exactly is the management structure going to look like? How are the executive responsibilities going to be shared between both the companies?
No, it's Adani Gas is already a public company, so the management and all board constitution management is in place, and this will require Total to bring in its directors on the board. But beyond that, the management, everything. Already as a public company, Adani Gas.
Yeah, of course. Yes. But from their side, what kind of executive responsibilities would Total get into the company? What kind of changes would take place? Would there be a French CEO, something like that?
No, I think the Total has made a decision that it believes there's competent management there today. So I think we are very fortunate to have a very good team in AGL. Ably led by our CEO and CFO and the board. So I think it would be remiss to comment on the specificity of it. But we are very comfortable with the management. I think Total is very comfortable with the management. That's why they've taken this decision.
Robbie, let's just, since we have the opportunity to talk to you in the studios, at a group level, I mean, we've seen lots of fundraising activity overseas. Could you just talk to us a little bit? How much have you raised recently? Or maybe year to date, what is the thinking behind going overseas to raise this money?
Yeah, I think just to it's a very good question because it's a moot question at this point in time, given the dislocation within our domestic financial markets. But I think for us, Mr. Adani made a decision around 2012, 2013. That he believed that the best way for us as an infra company was to ensure, as a portfolio of infrastructure companies, to ensure that we have access to global capital markets. So it's actually a long time in the making. It's a 6-year journey already. And our objective was to effectively showcase, which we believe that what the family has created is exceptionally high quality infra assets. Which compare anywhere else in the world. So I think we thought that if we can showcase those assets to the world, then we will get access to the global infrastructure investors. And secondly, it allows us to diversify our funding sources from one market. In 2012, we were 100% in the Indian banking market. Today we are about 40% Indian bank market, about 20% in foreign banks in India, and about 35% global markets. The objective there is that the global infra market offers us what you would call as term matching. So if we have a PPA for, say, for example, in Adani Green recently concluded transaction, we have a PPA for 25 years. Now we have an end-to-end funding for 24 years. So there's no interest rate risk, there's no FX risk, so we can fully hedge all of that. Which means that because we bid on a basis of fixed price in PPAs, in transmission service agreements, it becomes very, very important for us that we do not bring in a new risk into that entity by having, say, interest rate risks or having. So our objective was to do that. Secondly, we genuinely believe that in India, Mr. Adani and family have invested and created exceptionally good world-class assets. So if you go inside Adani Power's plant in Kauai, you will be hard-pressed to tell whether you're in Germany, Japan, or India. So I think it's very important that we showcase that even tough sectors, which is notionally power sector is tough, but we've just issued from a green power sector bond in the market, which was very successful. It's very important for us to show that to the world, that what the Honorable Prime Minister is saying is actually true on the ground, that investment is valuable.
Fair enough. Is it also, I mean, all those reasons are absolutely valid, but is it also a reflection on the state of the banking system here? I mean, how impaired it is, it's a constant point of discussion. I mean, one is you yourself proactively diversifying, the other is a bit of a push factor as well.
I think we are fortunate that we have good access to the banking system, so we don't actually face that issue, or specifically, none of our companies do.
No, I was talking about infra in general.
Infra in general, yes, because you do have a anomaly in the market at this point in time, and it has been the case for the last 20 years, which is that we are unable to have long-term funding at fixed cost of funds. So that's just a market factor rather than the specific issue with the banks.
Okay. Just a quick question, Robbie, before we wrap up the conversation. By when are we expecting to close the deal, and by when do you expect the promoters' shareholding to come down to 37.8% and Total to go up to 37.8%? When do you expect all of these formalities to be completed?
The statutory and compliance procedures will probably last about 7 to 8 weeks, then followed by a couple of weeks to 4 week period where the public market offer is in place before we understand where Total ends up from the public. Then it's actually a technical process of just completing as quickly as we can. So overall, we expect that this process should wrap up somewhere between mid-January to end of February.
Ravi, another point which I must ask you since you're with us here, and you may choose to answer this or not, but government's divestment plans, right? I mean, we're all talking about it. Advertisements are out for 2 entities. Would the Adani Group be interested?
See, as a family led by Mr. Adani, we broadly are in 2 paths: transport and logistics, and power and utilities. If we genuinely believe that there's an investment opportunity where it meets our test, which is that we can take over an asset and bring it to world-class standard, or the asset itself is world-class standard, we have good visibility on the operational profile of the asset, and it can withstand our rate of return on capital requirements and risk-adjusted cost of capital, then certainly in these 2 areas we will look at it.
Okay. So you're not ruling anything out right now?
No.
Okay, and what's your corpus for it?
We have sufficient capability to take substantial positions if we need to.